Good afternoon and welcome to the Camarda Wealth Channel. I'm your host, Troy Lerche, bringing this week in wealth. Sorry for the delay on the video. This is for the week ending November 5th, 2021. We had another up week and the markets have been very strong since the start of October in the fourth quarter. And hopefully we can continue that momentum into the end of the year. We'll always start with our CAPE indicator. The CAPE indicator is now up to 40 even, up from the prior week's 39.22. We have since nothing's changed, four of the four indicators are still positive and we're in cyclical bull territory. For the US markets, we had an impressive week of gains. Economic data was strong or healthy and earnings were good. We had the Federal Reserve had a relatively dovish meeting. So the Dow Jones, Dow Jones, S&P, and the NASDAQ all reached record highs. The Dow cleared the 36,000 milestone with a 508-point gain, which was an increase of 1.4%. The NASDAQ rose fifth consecutive time, up 3.1%. And we had large caps up 2%, mid caps and small caps finished the week up strongly 4% and 6.1%. So that was a big week. Internationally, we had major international markets finish the week predominantly in the green as well. We had international developed markets rose 1.7%, while emerging markets finished the week a little bit unchanged. Commodities, we had precious metals finish the week solidly to the upside as well. Gold rose 1.8%, silver up just under 1%, and oil actually closed down for the second week in a row, declining 2.8%, which maybe we'll see some relief at the gas pumps, but I doubt it. And then industrial metal copper finished the week down 0.6%, so pretty much unchanged. Some U.S. economic news here that I've highlighted. We have manufacturing activity in the U.S. remains robust in October, despite many hurdles. We also had a key announcement from the Fed. They announced it would be winding down its bond buying program designed to prop up the economy during the darkest days of the pandemic. Some international economic news. We have Canada's banks have gotten the green light to resume share buybacks, and increase their dividends after regulators removed restrictions put in place to protect the financial system during the pandemic. Across the Atlantic, we had business activity in the United Kingdom hit a 3-month high in October, exceeding expectations and indicating the economy remains on an upward trajectory. On Europe's mainland, we had a French president said he would be postponing planned trade sanctions on Britain so that the negotiators from both sides could work on new proposals to settle their dispute over the post-Brexit fishing rights. There's also some good information here on Germany, and in Asia, we had some China information in Japan. But the last one I'm going to talk about is finally the average price of a new vehicle has spiked about 25% since the start of the pandemic, from about $35,000 to a whopping $44,000. Shortages of key materials, such as semiconductors, have not only limited the number of production, but also incentivized automakers to build the most expensive, highest trim versions of their vehicles. The result is automakers and dealers are making an enormous amount of gross profits per vehicle sold in their showrooms in a take it or leave it scenario. In October, dealers made more on average $5,129 per unit in gross profit, including contributions from finance and insurance F&I sales, smashing the prior record and up an amazing 75% from the same time last year. The data is from JD Power and the charts from wolfstreet.com. And you can see the average transaction price of new vehicles from 2014 all the way up to, since the pandemic, probably right around here. And you can see 2020 was so-so and then skyrocketed so far. So that's all for today. Hope you have a great week and we'll look forward to talking to you next week. Take care.